गुड मॉर्निंग। आप सबों का स्वागत है द प्रोग्राम ज्ञान से कल्याण। माय डियर फ्रेंड, we have started accounting basic with terms used in accounting and the various questions answered. This is very important for the learner of accounting and the person who are practicing and doing accounting work. So this is also very important for the students who are doing class 11, 12, BCom, MEMCom, BBA, BCA, CA, CS, ICWA. Myself, Associate Professor Dr. Baidyanath Ram Prajapati. So, we are going to understand today the financial statement as we have discussed the basics of accounting. So, the fundamentals of accounting, journal entries, concept and conventions, posting, preparation of ledger, and preparation of trial balance. So after preparation of trial balance, basically financial statements are prepared. So this includes trading account, profit and loss account, balance sheet, ratios, cash flow statement, and accounting notes, etc. So the very important first question is, what is financial statement? So a stakeholder is maybe any person associated with business. So he may be associated with the business actively or passively, directly or indirectly. So all the accounting informations are meant for the user. So user may be the owner, the manager, the director, the government, the creditor, the banker who has given the loan, so the researcher. So these all are seeking information, requiring information for their own purposes. So we are going to discuss the financial statement. So this is a statement which includes all the information, all the transactions which is done in a business for a particular period. So today we are going to understand the very important concept. What is expenditure? What are the different type of expenditure? So what is the difference between capital expenditure and revenue expenditure? So the capital expenditure are those expenditure which are meant for the long-term purposes, and this creates the production capacity. This long last. These are the infrastructure. These are the capital assets, fixed assets like land, building, plant and machinery. And the another hand, there is another type of expenditure which are regularly, daily, frequently incurred for the maintenance of the business like salary, rent, cartage, purchases. So these all are the expenditure. So the revenue expenditure are recurring expenditure, capital expenditure are non-recurring expenditure. Capital expenditure are heavy in amount and the revenue expenditure are small. So the capital expenditure are not meant for resale purposes, and the revenue expenditure generates the product, and that is meant for resale purposes, for the purpose of earning income. So next very important part, that is the distinction between revenue expenditure and capital expenditure. Here some of the differences are provided for the better understanding. Capital expenditure increases earning capacity of business, whereas revenue expenditure is incurred to maintain the earning capacity. Very important. So next important difference is, capital expenditure is incurred to acquire fixed assets for operation of business, whereas revenue expenditure is incurred on the day-to-day conduct of the business. Revenue expenditure is generally recurring expenditure. Capital expenditure are non-recurring in nature. The next very important difference, capital expenditure benefits more than one accounting year. In case of revenue expenditure, normally this benefits only one accounting year. Capital expenditure are subject to depreciation, but revenue expenditure are subject to adjustment for outstanding prepaid expenses, etc. in trading and profit and loss account and balance sheet. So here some of the examples are given for the other type of expenditure, that is the deferred revenue expenditure. So like the heavy expenditure which gives benefit to the business for 5 years, 6 years, 10 years, we may say for a longer year. So here that is the deferred revenue expenditure. This is heavy in amount, and we have taken the example of advertising expenditure. So in we are dividing all of the expenditure for the period in which we are going to take the benefit, like 5 years. So total expenditure, suppose 5 lakh, we will divide it by 5 and we will get 1 lakh. This 1 lakh will be debited to the profit and loss account, and the rest will be shown in the balance sheet asset side. Here some of the examples are given for the balance sheet purposes. What are capital and revenue incomes and expenditure? Analysis of trial balance. She answer in the next page. So my dear friend, here we have to categorize whether cash is expenditure or capital expenditure or revenue expenditure. So cash is the capital expenditure, bank is also capital, and wages is revenue, salary is revenue, furniture is capital, rent on building is revenue, debtor are capital, bad debts are revenue, purchases are revenue, capital is the capital, sale is the revenue income, creditors are the liability, and long-term loan are the liability, commission received is the income. So just for the better understanding, we have taken one example here. So how we can analyze a trial balance? So here the just we have discussed whether we will debit or credit and how it will be shown and how we will understand. So here the account, then title, element, LLF, debit, credit. So cash is asset, it will be debited. Capital is equity, so it will be credited. Bank is asset, it will be debited. Sales is revenue, it will be credited. Wages is expenses, it will be debited. Creditors are liability, this will be shown in credit side. Salaried expenses side, it will be shown in the debit side. 10% long-term debt is the liability, and it will be shown in the liability side. Furniture is the assets, commission receipt is the revenue, rent of building is expenditure, debtor is assets, bad debts is expenditure, purchase is expenses. So here we can understand better the different types of the item which are spent in running the business. So here again we are proceeding financial statement. So what are the basic objective of preparing financial statement? So first very important objective is to show or to present a true and fair view of the financial performance of a business, to present true and fair view of the financial position of the business. So here the performance as well as position. Performance we are showing by preparing the trading and profit and loss account, and position we are showing where we are standing. So we are preparing balance sheet. With the help of balance sheet, we can see how much business is owing and how much business is owing to the other and owed by the others. So following are the financial statement. So just we have already discussed trading and profit and loss account and balance sheet. This is the two fundamental financial statement. Just we are here proceeding to other part. What is trading and profit and loss account? So this is financial statement 1. Just we are discussing. In the second, we will discuss the various types of adjustment. So trading and profit and loss account, also known as income statement. It shows the financial performance as we have discussed in the previous slide. How much we earned and what is the loss incurred. So the another very important one is balance sheet. So balance sheet shows the financial position in the form of assets and liabilities and capital. So here some of the example and how we can understand better, how we can prepare the trading account. So items which are shown in the debit side of a trading accounts are basically opening stock of raw material, semi-finished goods, finished goods, and purchases, wages, carriage inward, all the other direct expenses. So all the expenditures are directly spent for the purpose of production, for purchasing raw material and related to purchases and conversion of raw material into output. And in the credit side, basically we are showing two items, that is the sales and the revenue and the closing stock of the finished goods and all other raw material, semi-finished goods, etc. So concept gross profit and net profit. What is gross profit and what is net profit? So direct expenses and indirect expenses. So in finding out gross profit, we are deducting all the direct expenses from the sales. So direct expenses mean all expenses directly connected with the manufacturing, purchase of goods, bringing them to the point of sale. So here very small equation is given. Gross profit is equal to sales minus purchase plus direct expenses, and net profit is equal to gross profit plus other income minus indirect expenses. So next very important question, what is balance sheet? It is a statement prepared for showing the financial position, or we may say the summary of assets and liability at a given point of time. So my dear friend, we must remember the assets reflect debit balances and liability including capital reflect credit balances. Very important. Here for the better understanding, to understand, we have taken some of the questions we have to provide whether the statement is true or false. So we have to try it by ourselves, and somewhere answer are provided to check the correctness. Here is the second test. We have to compute the cost of goods sold. So cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. So here again answer is provided for the better understanding. Next question, what is operating profit, or we can say income before interest and tax? So here some of the MSQ are also provided. Operating profit is equal to net profit plus non-operating expenses minus non-operating income. So here again another questions. Choose the correct option in the following questions are provided. So somewhere answer for this question is given. We have to check our understanding. Another very important MCQ is also provided. Very important one. So here, my dear friend, the format of balance sheet is given. How we can construct, how we can prepare a balance sheet. So in the top we are providing the name of the company like ABC Limited as at. a particular date is given, that is 31st March 2020. So in liability side, basically this is for the proprietary business, capital, and then we are adding the profit, then we are deducting the drawing. So if there is a interest on capital, we will add, and if there is a loss, we will deduct that one. So again we are showing the long-term loan, short-term loan, sundry creditors, bills payable, bank overdraft, and the another item that is very important which is left here, that is outstanding expenses. And in the asset side, all the fixed assets are given at the top. So furniture, cash, bank, goodwill, debtor, land and building, closing stock. So we can show this either in the permanency way or in the liquidity way. Here the mixed items are given, so we may provide in the permanency way, like in case of the liability are shown. First we will show the fixed assets, then the current assets. What is marshalling and grouping of assets and liabilities? So arrangement either in order of liquidity or permanency is called marshalling, and in case of grouping, current assets and fixed assets are grouped under a particular head. Arrangement of assets and liability in a particular order is known as marshalling. In case of permanence, the most permanent assets or liabilities are put at the top in the balance sheet, and thereafter the another asset, that is the current assets, are shown and arranged in their reducing level of permanence. Here note is provided. In case of liquidity, the order is reversed. We will show the liquid asset at the top and the permanent asset in the below. Grouping of assets and liability. The term is clear. In the balance sheet can also be properly grouped. The term grouping means putting together the items similar nature under a common head. For example, the balance of account of cash balance debtor can be grouped as under the head of current assets, and the balances of fixed assets and long-term investment under the heading of non-current assets. So here examples are provided for the better understanding. We have to group it. So what is opening journal entry? My dear friend, this is very important. So the beginning of the accounting period, that is the 1st of the April, we will open the account. So from the balance sheet, all the assets are debited and liability are credited. So this is the opening journal entry is provided. Furniture debit, debtor debit, bank debit, cash debit to capital, to long-term loan, to creditor, etc. So in the right hand side, a question is also provided. Calculate gross profit from the following information. This is very important. Answer is given. We can match after calculating it. So key term used in this very important slides are here provided. Balance sheet, grouping and marshalling, bills payable, bank overdraft, capital, etc. And interest on capital, net profit. These all are the different terms we have used. So these terms are very important. So here again the key terms. So these terms are very important for the accounting and understanding the accounting. Here drawer, payee, drawee, these all are used in case of the bills of exchange, bill receivable, bills payable, drawing of bill, acceptance of bill, payment of bill. So meaning and characteristics of balance sheet is also provided, and in the right hand side we have taken earlier to test. So answer is here provided. The balance sheet is a statement as we know, And this is the statement of assets and liabilities at a particular date. It shows the financial position and it contains information about the assets. In the balance sheet, the totals of assets and liabilities are always equal. It portrays the accounting information, or sorry, accounting equation. And in accounting equation, we all know assets is equal to capital plus liabilities. So my dear friend, here some of the information about the trust on behalf of which we are providing these all services. Vishwa Manav Kalyan Charitable Trust, registered under the Trust Act. So we have to promote, spread and donate awareness about the knowledge donation, that is the Gyan Dan, each one teach one, blood donation, very important. There is no substitute of blood, blood organ donation. This is again very important. The good donation, that is the Andan, this is again very important. The poor, our brothers and sisters. So for your help here, brief information is given, and some of the few objectives of the trust are also provided. You join for the service of world human mankind. Thank you very much.